Hey everyone. Today on Real Talk, Real Agents, we've got Caitlin Allison, the Senior Vice President and Business Development Officer for SBA Financing at Bank of America. We also have Gerald Baruti, Senior Vice President at Business Finance Group. Gerald's been in the business for 20 years, and it's a real honor to have both these heavy hitters with us today on the podcast. We're going to touch on SBA financing, the ins and outs, and how you can get set up to bankroll your business. Tune in and enjoy this episode of Real Talk, Real Agents. And just like that, we're in it again. Hey guys, thanks for joining me today.
Thank you for having us.
Yeah, thanks.
Today we've got Gerald and we've got Caitlin. These are the big hotshots at Bank of America running their small business development and SBA loan programs. It's not every day that we get the heavy hitters, the ones with the money here. So thanks for joining us. I'm really excited. I think we're gonna get a lot of value for our folks. So first off, why don't you guys introduce yourselves? We'd love to hear a little bit about what you have going on.
Sure. So my name is Caitlin Allison. I am the SBA Business Development Officer at Bank of America for Maryland, DC, and Virginia, and temporarily Tampa. And what I do is I work with all of the bankers and small business clients in that territory anytime SBA financing seems like a good option for the business.
Cool.
Yeah, and I'm Gerald Baruti. I'm a Senior Vice President with Business Finance Group. We are a certified development company based out of Fairfax, Virginia. And my role, I work a lot with banks, various banks, Caitlin. And my role is to help the banks and business owners to navigate this particular program, which is a 504 loan program for businesses who are acquiring commercial real estate.
Amazing. Well, let's get into it. Let's just start with the basics. What is SBA, and why does someone looking to go into the business world, maybe start a business, care about SBA?
So the Small Business Administration, what they do is they help participating lenders like Bank of America in support of financing options through what we call an SBA 7A program, where we can do real estate, business acquisitions, partner buyouts, equipment, long-term working capital for a client, or utilize our 504 program specific to real estate or heavy, expensive equipment, particularly a specific piece of equipment like a crane, a huge vessel, something that would make sense to give a longer term and also potentially from a risk perspective, be able to partner with the CDC. And so that really what is SBA financing is, and it allows the banks to be able to provide longer terms for clients that may not qualify conventionally and get the guarantee from the government in support of that loan.
Pretty cool. Is it right? My understanding is because of the financial backing of the federal government, the financial layout that a consumer or a small business would want to need to lay out to secure that loan is actually much lower than a conventional loan?
That is correct. We require 10% down. So it allows the client to keep more cash on hand as they get adjusted to whatever payment and the loan amount they're looking to acquire.
That really helps. I mean, most small businesses fail within 60 months, 5 years, right? So having a little less to come out of pocket to get started is going to be a big help. That's cool. And share with us, how does the CDC, not the Center for Disease Control,
That's correct.
roll into this 504 program? Share it with us.
Sure. So with this program, SBA cannot actually initiate it on their own. So they do it through entities like ourselves. There's roughly about 200 of us across the country, and
Cool.
we all have an economic development mission. So our focus is to help small businesses acquire this real estate. So they come to us. Most times we actually get phone calls from our bank partners, but banks are our primary client. But I would tell you, since the pandemic, we've seen a lot more outreach from small business owners themselves. They became more aware of the agency, what it can do. So they're actually, it's not unusual for small business owner contact us directly. So what we do is we actually help get the program, make sure that the client is eligible for the program. We do all of the heavy lifting. So the bank itself doesn't really need to have an SBA department.
So you're going to curate that deal before it gets to Caitlin's desk?
Sometimes.
Okay.
Most times it will be a Caitlin calling me to say, hey, I have a client. Can you help me with it?
Yeah, typically Gerald and I will work together when it's real estate, and it makes the most sense for the client because there are some big differentiators between the 504 program and the 7A program, especially when it comes to if a client has angst around a personal lien, which can be required for a 7A loan, then 504 may be a better fit for the real estate. We're still going to do a 25-year term on both options. But when we do heavy construction, Gerald is a great partner because it allows the bank to be willing to take a little bit more risk to get the deal done. So that's really how we partner.
And let me piggyback on what Caitlin just said.
Yeah.
So both programs really can be used for the acquisition of commercial real estate.
Cool.
Okay. So the huge difference between these two programs is that, when you look at 7A, the bank doesn't need a CDC. They're going to use a delegated authority. If they're a preferred lender, they'll do all of this on their own.
Understood.
Right. So with a 504, then they'll need a partner like ourselves.
Well, let me ask you this then. Like, we're going to advise a group or someone on their own is going to say, look, I want to start this franchise. I want to build a small business. Right. I want to buy some equipment for my property or for my business. How is the SBA and what factors go into determining how much they can get?
So what really we look at, for one, Bank of America does not do startup financing for a business. So we do require 2 years in business with $250,000 in annual revenue in the previous year. That is one qualifier.
Yep.
What we look for is how profitable the business is, along with the guarantor, which would be the owner.
Right.
And sometimes with SBA, we do see spousal guarantee as well to help support the request, especially if the spouse is involved in the business or is a non-owner, but we may need to leverage additional income. And so what we really look for is the cash flow of the business, between the business and the personal. So for every dollar of debt, we are going to look at injecting into the business for the project or whatever they're looking at accomplishing. We look for $1.15 of profit between any current business debt, personal cash, business cash, and financials of the business and personal.
So to clarify, for every dollar of obligation, you need $1.15 of revenue. Oh, profit. So that's net.
Yes.
Got it.
And there's a calculation. And typically what I do with clients, especially clients that are looking to take on a debt obligation, I will usually work with them and do a pre-work calculation to really let them know where their business is from a healthy standpoint of responsible lending with what they're trying to accomplish. And then we kind of work through it from there and make recommendations around that.
Can I use SBA financing to buy an existing business?
Yes. Through our 7A program, we do business acquisitions, and we do them on 10-year terms. And the business that they are buying, it has to be fair buyer and seller with the purchase agreement. We want to make sure our buyer is protected during that process. And we also want to make sure that the seller business is in a position to sell in a positive and not a negative light. So if they're selling the business because the business is struggling, that will be a challenge because we're not going to know what's going to happen with that business or what that evaluation is going to look like until we get through underwriting. So we do like to see positive trend in the business they're looking to acquire.
So the bank is assessing risk. Like, hey, if we issue this loan, what's the guarantee we're getting our money back?
Essentially, and protect the client too, because that can put them in a negative space if they're buying a business that is trending down, because that's going to ultimately impact potentially the business that they have that we're using to get the loan done for the business they're looking to acquire.
Are there caps, both minimum and maximum thresholds in terms of what the SBA will loan on? Like, can you get a $100 million SBA loan or are you capped at a certain number?
It's $5 million cap on our 7A program. And for 504, there's no cap, but I know there are certain guidelines to that I'm going to let Gerald talk about.
Cool.
Yeah, so the unique thing about the 504 program is that you can have a large manufacturer or maybe a green project actually allow you to take on larger properties. So the bank is always, the bank's minimum loan to value is 50%, but it can actually go a little higher. So we're going to be capped at $5 million under, and that's just the SBA portion, my portion. Mm-hmm. We would typically be capped at $5 million. For manufacturers, it's $5.5 million. And because of the need for more manufacturing in the U.S., anytime we see a manufacturing project, they're not really subjected to that cap. Now, at some point, it gets to a point where you say, well, why do we really need SBA financing?
Right.
It becomes so strong. But technically, manufacturers do not have a cap. Now, if it's a green project where they're doing some sort of, renewable energy source.
A solar project, exactly. A wind farm.
Right. So now with those projects, they can actually have 3 different 504 programs. They're capped at $16.5 million. Again, they can have 3 different 504 programs. The bank can always do a larger project. So conceptually, they could be looking at a $25 million project. They will still be in a good position because they will have a better than average loan to value.
How far out are we writing that loan? Is that going to be a 10, 25?
20 or 25 years.
20 or
Maybe
25 year loan?
Real estate, yes.
Awesome.
Yeah. Now, uniquely enough, for as long as I've been doing this, I've had 2 clients who chose to go with a 10-year debenture, right? They were risk averse.
Sure.
They didn't want to have a lot of debt. So they chose a 10-year. The cash flow worked. We made it happen.
You probably get a much better rate at 10 years.
These days, it's very thin in terms of the spread.
Really?
Yeah. There's not
Wow.
a huge distinction between those two. But
This guy just was debt
it
averse.
just, yeah, exactly.
Which is why it makes sense in this rate environment for business owners to really take advantage of SBA financing, because we can term it out so much longer with prepaid penalties that are not that significant compared to conventional financing options.
How long you locking them in
Where we're
for a
doing
prepayment penalty?
So for 7A, we have a 3-year prepaid penalty. There is a percentage amount of 25% cap per year that they can pay in addition for the first 3 prepaid penalty years. For our 504 option with real estate, and I want to state that in real estate because everything else that isn't real estate is going to be a 7A option.
Understood.
We don't have a prepaid penalty on the bank portion, but the CDC partner has a 10-year declining prepaid penalty, which Gerald can talk a little bit about how that's structured.
Yeah, I usually don't spend a lot of time talking about the prepayment penalty because that usually comes up. And the reason why is this. Our program, with the 504 program, the borrower's going to have a fixed rate for 20 or 25 years.
Amazing.
It's locked in. It's the cheapest money they can get on a long-term basis. So what I normally recommend to them is work with your bank. If the bank will allow you to prepay theirs, because Bank of America is unique in that they have a 20-year fixed rate program, but most banks don't. So most banks are either going to fix it for 5 years or 7 years, maybe 10 years.
Yeah.
So who knows what the rate environment will be in that period.
You have an adjustment or a balloon on the back end.
Exactly.
Yeah.
But at least on the SBA portion, they're locked in.
No, I know a lot of people don't talk about this, but as an advisory firm, our job, as the commercial brokers, is to think about all the potential potholes that they may get a flat tire on this project.
Right.
And what are the strategies? Maybe exit. Maybe the business is so profitable that they can sell it. So is this loan assignable? If they decide to sell the business and satisfy the loan, do we have to work that into the calculation for potential early termination? So I agree with you. Those terms, the length is amazing. And that's one of the reasons why we're so happy to partner with you guys, because it's an advantage for any small business operator. I mean, it's just a no-brainer.
Right.
But no, I appreciate where you're coming from with that. Look, we're coming out of a very, what I call the la-la land of real estate and interest rates, which was COVID. And I know you mentioned that COVID may have affected SBA. It may have affected small businesses in some ways. Can you share with us kind of what was the environment that COVID set up? And then now that we're kind of transitioning back to a more of a normal marketplace with more normal rates, how does that look like now from your perspective as the money people?
I can jump in on
Let's
that
go.
one. So what the pandemic did was, of course, it impacted a wide variety of businesses.
Everybody.
With the exception of 1 or 2, mental health. We saw those folks thrive, because again, during the pandemic, people were cooped up, a lot of depression. So those practices thrived. Because
Yeah,
they did
drug
not
companies.
Yes. So what that created was this, and obviously the federal government had to step in and help small businesses. So there were payment subsidies that, people became aware of. Folks who did, lost revenues had their SBA notes paid for them. So that awareness, of course, you had PPP loan. Everybody knew about it. Yes, you had some fraud in it too, but there were a lot of good stories behind it. So that collective awareness in the small business community created this, hey, you know what? The government can do some good, right? And so now I'm actually seeing clients who are saying, I prefer to go with an SBA note because I know that if the sky is falling again, I've got that umbrella behind me. I've got the federal government behind me.
Cool.
So that's the awareness it created. I don't know what you saw.
Yeah, I agree as well. Post-pandemic, we, especially, at Bank of America, and we, have created these roles where I'm local, I'm in the market. They are really preferring to take advantage of not just SBA financing because of the backing of the government, but also because of the terms that we can offer. And the government is consistently finding ways to be more proactive and making the program better and better and better. And so it's a real advantage for clients to take that. And since they helped during the pandemic, they're more open to the process. prior to the pandemic, everyone kind of had the thought process, at least on my end, that SBA is so difficult. And that's really not true. There's not that much more that goes into an SBA loan compared to a conventional.
May I? Is it possible that the reputation for SBA being so bad or complex or a headache is that there's a lot of folks who are maybe not approved SBA lenders who have to maybe go to the back of the pipeline as opposed to those who are kind of already in the mix?
I think it's more educational.
Okay.
Because I think there's just this interpretation that, it's difficult because it's guaranteed by the government, but that's not really true. And that's really what we're here for, is to explain that program. And the SBA offices are also highly connected to any lender or CDC partner as well in the marketplace to really thrive and throw business owners in the right direction of, where lenders can help.
Well, there are a lot of nightmare stories about SBA lending. Sometimes I will have a commercial realtor call me and say, wait a minute, we're not going SBA. And historically, what has happened in our industry is that, you have folks who, they just don't have it's a program that's constantly changing. So there's an SOP every year. You have to stay on top of it. This is why I enjoy doing it. I've been doing this for about 30 years.
Wow.
It never gets old.
Yeah, the regulations change every year.
Yeah. So, but when you have folks in this industry who are either not real well versed, and there's a shortage of good quality SBA lender. So if you're working with someone who does not anticipate, and I'll give you an example. Caitlin and I, we're looking at a project together. Okay, I already know this, that, hey, if this project is either if the building is more than 50 years old or it's in a historically designated market, there's some additional steps we need to do. All right, so why not be proactive, inform the client, inform the seller, get ahead of it so there aren't any nasty surprises.
I like it.
So,
and Gerald and I are talking consistently and staying connected with whether we're working a deal together, or I might say, hey, can you advise me around this, around SOP, because continuously change. His interpretation might be different than I. So it's really important that we have a strong partnership just in the marketplace in general.
That's great.
And bankers are expected to multitask these days. So back in the old days, you had a district office that could offer training. Now, depending on the bank that you're with, you may not get that training. So all these local SBA district offices, they have a different role now. So everything is centralized in terms of decision making. So for the new banker coming into the market, they really have to rely on someone like Caitlin, or actually be involved, in their own training, in their own education. So that's why you see a variety, depending on bank you're working with. Not all of them are,
Yeah, I mean, this is a testament that, who you work with matters.
Exactly.
And if you're not operational, right, then you may not have the success you're after.
Exactly.
Just to close out the, the nightmare stories, the COVID and so forth, what happens? Because we saw a lot of business went belly up, right?
Right.
What happens if someone defaults on an SBA loan? Is it standard? Is it the same thing that we see with a conventional loan, or how does that work?
Well, from an SBA perspective,
and also any stories that you think would be of value in that regard.
Sure. So, I always recommend with our clients that, you're working with your lenders, making sure that, at the end of the day, that the haircut that SBA or the federal government is going to take is minimized. Okay, because when you have a federally backed program, the last thing you need to have is taxpayers saying, why are we lending to businesses that are not solvent? Right.
So if you as a business operator feel like you may not be able to make those payments, get ahead of it. Talk to your lender.
Exactly.
Understood.
Work something out so that, again, because the worst thing you can do is not return phone calls. The worst thing you can do is not, be involved in your own, salvation, so to speak.
Fair.
And at the end of the day, if you default on an SBA loan, it's just next to impossible to get another one in the future.
And there are a lot of, even at Bank of America, we have a lot of different paths to take. So if a client's in a position that they feel they may be in trouble business-wise or maybe making the payments. So we do have avenues to try to help them from defaulting on those loans. And that is a lot of what we did during COVID.
Amazing.
And again, working with the right partner, so that you can work through those issues.
Yeah, and if you have a partner who can see forward and understand your perspective, maybe there's a way to get creative and stay in the business.
Exactly.
Pretty cool. Exactly. Can you guys share some success stories? I mean, I know we're talking doom and gloom here just because, as a firm, like I said, we always want to advise on the worst case scenario first so that when the deal does pencil, it actually is more profitable. But yes, share with us some of these cool deals, whether it's an environmental green deal or just a standard SBA loan, anything would be great.
I'll give you a really cool story.
Let's go.
So this is an equipment only 504 loan.
Okay.
Because most of my bank partners don't realize that you can do that.
What was the business?
The business actually was a government contractor. So they
Okay.
had a lot of contracts with the federal government. And during the pandemic, they noticed, obviously, we had shortages with PPE equipment and
Got
things
it.
like that. These folks were engineers, and they saw the opportunity that they were not, of course, as you may recall, there were a lot of issues with getting, materials from China.
That's right.
So they saw this opportunity, like, well, why are we not manufacturing our own gloves here in the U.S.?
So you don't have to worry about the supply chain.
Exactly. So we worked with this client. Actually, they came to us. They could not find a bank partner to get on board with them because they were actually pivoting from their business model. So, we worked with them to make sure that they could clean the business plan. And again, just kind of, we saw an opportunity. We said, this makes sense.
Okay.
A manufacturer is going to be doing some good work for the, U.S. community. It was a win-win for everyone. So we did finally find a bank partner that was willing to, actually come on board and help them finance it. It's in a lease space. The client had done everything right in terms of not signing on the lease until the financing was in place. That was a pretty cool story because, we now feel like we're part of something that's being kept within the U.S. borders.
Amazing. What was the loan size?
That was a $3 million project.
$3 million?
Equipment only.
And so their equipment was to manufacture PPE?
Yes, manufacturing the sterile gloves that
Oh, amazing.
Exactly. So, and coincidentally, the equipment was coming from China. So,
Fair
but
enough.
it worked out okay.
Yeah. Any cool stories?
Yeah, I do have a cool story. So recently I was working with an insurance company and they wanted to change their business model. They wanted to eliminate the third party broker from working with the insurance directly with the insurers. And they wanted to step in and take that place. So they're changing their business model. They needed about $1 million to do so. Client had cash. And so we really got to understand how the business was going to change, knowing that the business revenue was going to drop in the first year. And even with that, because we understood what they were doing, how it was going to impact the business in the long term within the next 3 years, we were able to inject long-term working capital for $800,000.
Wow.
And that's pretty significant through our 7A program. And the client was only a $4 million business owner.
That's amazing.
That's very, very significant.
Wow. And how long ago was that? And where are they now?
Well, actually, it was very, very recent.
Oh, cool.
So we are actually closing on that this month.
Wow. Congratulations.
Yeah. So super exciting. And there are industries that really SBA can support when they're doing those shifts in business model. And we can take the risk because we know the long-term goal and the client had cash to support in the event something was to pivot away from what they're doing.
Anything you guys think would be of value for folks considering starting a business or expanding an existing business, whether they're aligned with a franchise or, I know you don't do startups, but maybe it's a medical business or something of that nature, just maybe something we didn't touch on that would be of value to the folks out here listening.
So medical is a little different. Bank of America does have a practice solutions team that will do startup financing for medical professionals, veterinary professionals.
Yeah,
and
you helped me
dental
with my
professionals.
my dentist.
Yeah, so we will do startup for those owners because it's a specific program. Now, if it's an existing doctor, vet, or dentist, how SBA and practice at Bank of America support each other is if it's heavy construction. Mm-hmm. That is where we will partner together to get it done for the client, but they do have to be existing. But that is the only area of the bank that we will do startup financing at this time. Everything is subject to change. My advice would be to grow as organically starting up as possible, because when you're looking for financing, you want to be in a position where you do have cash that is going to support any loan that you want to take on, because there's going to be injections that you have to do 90% of the time. And to also, watch and project your trends. So that way, where the cash flow of the business is, that you're seeing profitability on the bottom line. Most businesses in the first year they start do not hit cash flow. And that's normal. That's very, very normal, which is why we do have that 2-year guideline to make sure the business is in the right position to take on debt.
Cool. I get this question a lot. Maybe you guys can shed some light on it for our folks. SBA financing as a secured instrument versus unsecured instrument. Explain what that means and what SBA's take is on it.
So we do not do unsecured SBA financing. In fact, at Bank of America, we only have 2 options for unsecured. They're very small line of credit options and term loans, but we still require personal guarantee, right? Because that person is what's driving the revenue of the business.
So
they're
secured means
investing.
that the borrower is going to actually put themselves on the hook if there's a default and or put up some kind of collateral?
With any type of complex lending, we're going to require business as the borrower and then personal guarantee for any owner that has 20% or more involved in the business. And as far as secured, that means that we're taking something for collateral, whether that's real estate, receivables, inventory, valuation of a business, equipment, depending on what the loan is. That's what secured means. We're securing something as collateral to do the loan.
And program requirements are if someone has a residence with lots of equity in it, they can't go to Bank of America and say, I'm not willing to pledge that. So so now Bank of America is going to have its own requirements. The program in general, the programs in general, 7A in particular, says that technically they can lend to a business owner who doesn't have any fixed assets, right? But you can't say, I have it, but I don't want to pledge it. Okay, so now again, it's important to understand for business owners out there, because they get confused a lot. Okay, there are specific program requirements with the 7A, which they will mix up with going to a Bank of America and saying, hey, how come you're not willing to do it this way? But the bank has the ability to set their own standards on what they're going to do. Doesn't mean that the next bank is not going to do it. Okay, so Bank of America requires, collateral, but another bank might say, no, we're fine, doing it without collateral. Especially if the bank if the borrower does not have the collateral to pledge.
So, and that's a great point. So for example, with our 7A, where we don't see a lot of assets to take for collateral, such as real estate or equipment. So particularly in business acquisitions, if they're leasing the space, they don't have real estate. The client has to know it is a SBA requirement that we can ask them to pledge personal residence and life insurance to support the loan request. And that's SBA guideline.
To get this incredibly long term, 20 to 25 years with a very low down payment, 10%, you have to give some kind of personal guarantee and business guarantee. And that's mandated by the government.
Correct.
Cool.
Correct.
I hear a lot of doom and gloom in the news. It's always the end of the world, especially when it comes to real estate these days. Why is this a great time to jump on the SBA bandwagon and grow your business?
Well, I will tell you this. Given, it's been a seller's market for a long time. True. Rates, even though we've seen some creep up towards, on the higher end, I think they're still historically low.
8% over the last 200 years is the average.
Well, in the past couple of years, you've seen an average of about 3.5%.
Amazing.
So that's remarkable. I can't believe a couple of years ago, we were in the twos, fixed for 20 or 25 years. I have clients calling me after they close and saying, wow, I love you. You did a great job.
It's never going to happen again.
It's never
Not in their lifetime.
Exactly. So it's still a very favorable rate environment for the small business community. You're a small business owner leasing, and in the beauty about the 504 program in particular is that no one really just kind of gets up in the morning and start a business. The first thing I'm going to do is buy commercial real estate.
It's expensive.
Exactly. And you don't know how the business is going to thrive, right? So you've been leasing for a few years, you feel comfortable, you've been making the landlord, wealthy. You say, hey, why don't I do this for myself?
Sure.
So that's the beauty about this program. And so the timing is critical. If you have a lease coming up that's due, I would take it. And the nice thing about it is that the program allows you to lease some of that space. So it's not all, you can have
so
that.
If you buy something, what is it, 50% can be offset?
51%, it has to be the business itself occupying.
So if let's say I'm a business owner, I'm running my business and I buy a place that's maybe twice as big as I need, I can lease up to 49% of that space to offset my expense.
Correct.
It's amazing. And 10% down?
Exactly.
Well,
as long as the business that is buying the space is in a position to take that full loan amount, 51% is minimum requirement.
It is a great time to get a business going.
Exactly. They have to be able to demonstrate that they can support the debt service. But it's a win-win.
Yeah.
What's the loan application process?
For us specifically, what we would do is we would collect all the financial packages.
So we're talking
that
tax
we would need.
returns,
tax
we're
returns,
talking
personal returns,
profit and loss statements?
Profit and loss statements for current interims. If they have account receivable and accounts payable, we'll collect the most current.
T12?
And then we also have 3 forms that are bank forms specific to Bank of America. We have a personal financial statement, a SBA 1919 form, which that form will be for any lender that's doing SBA, And we have a business debt schedule that we require so we can see what other obligations the business has. Then we take the package. If they're buying real estate, we need the purchase sale agreement, at least a draft, to be able to submit. And then we submit the request on behalf of the client.
Yeah. So I'll piggyback on what the bank, is requiring. The misconception about SBA lenders is a lot of paperwork. We this is all we do is commercial real estate. So normally I will get all the financials from the bank. Maybe I will have maybe one or two forms that are unique to us. We try to keep it very, entrepreneurial, because a small business owner has a business to run. The last thing
They're busy.
they don't want to be all this paperwork.
Right.
So that's why we come in and say, hey, let's just kind of streamline the process for you.
Awesome. That's amazing. I think the last thing I want to touch on is business credit. Do you need an EIN? Kind of any advice? Just an overview.
Right.
Again, some of our folks who are listening don't know about business credit. They don't understand, the difference between personal and business credit. Maybe shed some light on that, because I think it's a valuable thing to have in your toolbox.
Yeah, I would say as a business owner, especially starting out, if we're looking at doing financing during the road, I would encourage, typically the first step for a client to get business credit is starting with a business credit card, just like a personal credit, right? You want to buy a house, you're going to get a credit card to build your credit score, because just like a personal credit report, the small business credit report also looks at trade lines and credit to develop that score. Which is something that clients can also track on Duns & Bradstreet. They get a DUNS number, and it allows them to see what their credit score is. We as an institution do allow them to see their business credit score online if they have a credit card with us or establish a credit card with us within 6 months, so they can track that score.
Amazing. And Dun & Bradstreet is a great resource to track that.
Yeah.
How many trade lines? I know, for example, in the residential world, it's always good to have at least 3 trade lines. And if you're starting out with a business, you may not be able to get 2, 3, 5 credit cards. But is there a base number? Is one okay?
Well, we're going to also look at personal credit as well for the request. So I would say, you want to establish with business credit card for sure if there's business auto loans that the business needs, as long as we're not overextending ourselves and it makes sense, it's the right thing to do for the business. Those are usually secondary, and there's no time in business for a owner to get an auto loan under the business, and it takes it off their personal credit report too. So if they do have a personal obligation coming up before the business, they won't have that debt attached to their personal.
Got it. So business credit is something really important to nurture as you decide to venture into the business world and or expand your existing business.
Right.
It's amazing. Guys, this has been so informative. I mean, even for myself, I'm so grateful for, first off, this partnership and the leverage that you guys give us to provide our client base with these amazing advantages. Share with the gang, how do we get a hold of you guys?
So the best way to get a hold of me is via email or phone, and my direct line is I can provide.
Yeah, we'll get it in the show notes.
Yep, 443-678-2288. That'll come directly to me. And then we can have any discussion with a client or each other. And thank you for the partnership, because I know we've been working together to help clients find space as the commercial real estate market continues to have less inventory. And so thank you for your partnership.
We are incredibly grateful. I mean, to be truthful, we're a small shop, but we're efficient. I like to say we act like SEAL Team 6 or Delta Force in the commercial space. You've got the big shops with the big names, and a lot of times with these SBA clients, it's beneath them. And how'd you find us? It was a Google search, right? And that's
5 stars.
5-star reviews, right?
Yeah.
And it's a testament to that. And again, incredibly grateful for, first off, your willingness to come share with us the tools and resources that you're able to give our clients, and the fact that we can also in turn use our skills to help get these deals across the table. It's awesome, and thank you. Gerald, how do we get a hold of you?
Cell phone is the best way.
All right.
410-900-8271. I always have that with me.
Love it.
So,
cool.
But no, we certainly appreciate the partnership and the invitation. We always like the opportunity to kind of make small business community aware of what we do.
Boom. I love it. So like we said in the beginning, if you're going to start a small business, SBA loans are the best way to do it. Low barrier to entry, 10% down, 25-year terms with BOA. Amazing. And that's a fixed rate the whole way through.
That is true.
And you've got incredibly available and knowledgeable partners here with this gang. So again, thanks for tuning in. Appreciate you guys. On to the next.
Thank you.
Thank you.